Well, as you can see clearly here on Fire Charts Bin CBD, Bitcoin whales have bought this dip aggressively. Does that mean that they know something that you don't? Probably so. Does it mean that price can't go lower? Probably not. Hey guys, it's Keith Allen. Let's climb in and see if we can figure out what's going on here today. Obviously, we had a pretty significant dip yesterday. Not as big as some of us might be hoping for, but market doesn't really care what we like, right? And obviously we can see some changes happening in the order book here. So let's climb in and see what this looks like and what this might mean. We saw market-wide corrections yesterday. If we can call them that, dips, corrections, whatever you want to say. It wasn't huge. We had a pretty decent move to the downside yesterday on the Bitcoin side. That was about a 6% candle. Meanwhile, TradFi having some problems of its own with a couple of red days here. And this can be expected after the massive gains that we've seen here across markets here over the past several months. I mean, really over the past year, to be honest with you, there's been just a lot of just crazy upside that I think a lot of that was surprising to a lot of folks. I have not been shy about the fact that I've expected a correction, and obviously I'm still looking for one. On the candle chart here for Bitcoin, we can see we had this rejection here at a new all-time high. We made it over the prior high at 69K, right? That was a pretty awesome feat. But the rejection came hard, and the challenge to that level was difficult, right? This is 69K, the prior all-time high, and we had a series of rejections before we cleared it. Price broke down, and we just haven't had any consistent full candle bodies above it. We had one here, and we had a couple here, and now price is trying to fight its way back in, which appears to be happening at the moment. Keyword, at the moment, right? What can happen from here? And could we see potentially more breakdown? Well, a couple of things to consider here before we dive into the charts deeper. Number one, this was kind of new. Yesterday, Cathie Wood's ARK Invest actually had a higher number of outflows than Grayscale did. This has never happened before. And we've been looking at kind of the ETF flow here the past, almost daily, really. And what we can see here is, things have leveled off a bit, right? This was a holiday here, by the way. That's why it was flat. But things had leveled off here a bit. And in the past few days, we have seen, even the outflows on the Grayscale side, have been not as consistent, right? We had one day, this was, 104 million. That's a fractional volume compared to what they've had on some days. And then yesterday they had 82 million in outflows. That's like a low for them. Meanwhile, Cathie Wood's ARK Invest had almost 88 million in outflows, and that's something that we have not seen before. So is this a hint that maybe all of this excitement about the ETFs has cooling off, or maybe even boiled over a bit and starting to pull back? It's too early to tell here, but this could be an early warning sign of more downside to come. So we're going to be watching this closely to see if today is another day of outflows, and do these investors and do these institutions think that price is going to go significantly lower. So BlackRock still on pace here with decent volume. Fidelity also, kind of consistent here with decent volume. So let's just, be patient and watch how things develop day after day. On the economic front, we do have some news coming today with Fed Chair Powell speaking. This is still like in some weird daylight savings time offset. For those of you observing in locations that have daylight savings time, this is 12:10 Eastern time, 12:10 Eastern New York time that Fed Chair Powell will be speaking. I'd be surprised if he deviates much from what we've heard recently. I mean, we heard from him just a week ago, right? So, but of course we'll be listening closely for that. And those speeches do tend to facilitate some volatility. And we are seeing right now that there is some pockets of thin liquidity where that volatility could thrive here, right? So if we can clear this, then we've got some opportunity to move here around this thing. Now what's up with this right here? We've seen some of this liquidity leave this range. We saw this over the past few days. We saw a bid ladder of about 150 million come in here. and it started to get absorbed. And then we saw a secondary ladder come in here. This level is very important to me because we're talking 59K rather to 62K. And let's see what that looks like on the candle chart. There's correlation here between where the technical analysis is and where the liquidity is, and that's always something that adds validity to my analysis for me. Those are things that I look for. And as you can see, we have this area of prior consolidation, prior RS flip here around the prior bull market, around the prior bull market tops. And now, this year, we ripped through it pretty quickly, and we had one retest down here. This is the lower low right now at what stands at 59,300 and change. That's on this exchange. It could be, different, obviously, on any exchange you're on, but somewhere in this range. Bottom line is a lower low opens the door to new regions of interest. And the first one would be right here, where we had some consolidation in this 50 to 52K range. I can draw a channel around that for you so you can, highlight it a bit. This was an area that never got retested. So that's notable to me that there was no retest in this zone, right? Perhaps we are overdue for one. So if we break down from here, then I would be looking at this target right here. Here's the first line of defense to holding up here is at 63K. I think there's a CME gap around this range, so that's interesting as well in terms of confluence. If this doesn't hold, then we look at this, and obviously we do have liquidity in that range, which would be of interest. The fact that liquidity is that this new ladder of liquidity is thinning out a bit is a little bit of a concern, and we now are starting to see liquidity move right before your eyes here on fire charts. And we often see some gamesmanship around these Fed speeches, so that could very likely be what we have going on here. This would be plunge protection, but the fact that it thins out a little bit is not encouraging. How much did it thin out? Okay, so this was a 22 million level. If we hover past it, it goes down to 14.5 million, and did the same thing at each level, right? It trimmed out. So let me expand on this and make it easier to hover over. Let's see what we have here. 25 million down to 17 million. So, they took a nice chunk of bid liquidity out of this area. It does not appear to have turned into market orders at this point. But let's switch the other classes back on and see if we see anything else happening here, right? So we are starting to see some buying continue, and this was significant, right? This was like a $60 million bucks in buys. I can switch over to absolute CVD, and we can see the purple class. That's the 100,000 $1 million orders, and at their low here in this weekly time frame, they were down about 54 million, 54 million, and then came up to upwards of 10 million. So that's a $64 million move in market orders just in the last day, right? So that's significant in terms of market orders. May not sound like a lot to you, but that's a pretty significant amount in terms of what we see historically. And now price is trying to climb its way back up. So, that's positive for the short term. Let's see what Powell says and see if that gives us sheds any light on what might be expected. You can see, though, from the opposite side that some ask liquidity is coming down here to try and keep things corralled here, suppressed, if you will. Not a huge amount, though. It's only, 7.3 million. So, if there's sentiment to move past that, price can certainly do that. With this liquidity moving as rapidly as it is, I tend to exercise a degree of caution here because new liquidity is hard to trust. It moves frequently, and you've got to be careful of that. So be mindful of that as things progress. Just kind of watching the evolution. Back to the candle chart here on Bitcoin. Obviously, we have the halving coming up, so the outlook is bullish beyond that. And, it's normal to see some concern here when we see corrections like this, but we've been talking about those potential deep corrections for a long, long time. really hard, obviously, to time when they're happening and to know if whether we will get them or not, right? So if we do get it, 20% correction would take us right down to this prior to the lower low. A 30% correction would take us into this 50 to 52K range, and a 40% correction, which in my opinion would be a gift, would get us down to this 44, 45K range. So those are the downside targets I'm aware of, and the potential to go that deep. I would say that if we lose this level, if we lose this lower low, then you should prepare yourself for the eventuality to at least go to the 50 to 52K range. At the moment, we're not seeing any sentiment in the order book in terms of liquidity down in those deeper levels. We do see some coming into the 50K range, but so far, nothing of any significance moving into that 44, 45K range. So again, mindful of that. Of course, if price breaks down from here, you better believe we're going to start to see this dynamic change a bit. To the upside, we've talked quite a bit this week about the battle for dominance in these ranges, and it really comes down to which area has the highest concentrations of liquidity. We see a nice ladder here of bids going down, and it's great to see that depth. You definitely want to see that. But as you can see, the brighter spots tend to win these battles from the downside and from the upside. Encouraging to see that this is thinned out to the upside a little bit because it makes it easier to break through. But we've yet to see a deep concentration of bids on the downside from this range that could do it. At the moment, it looks like the 60K level has about 44K in it. I'd really like to see this. I'd really like to see this range closer to 100 million. This was 106 million here, and obviously did the trick and sent us moving up. This was 60 million. So even 60 million at one level with some good depth around it could be very helpful if we've got a pathway above. We do have a path to get back to 71K here. You can see that if we can clear over this 60 over this 67 hurdle. And then we'll get challenged at 69K again, undoubtedly, right? That's been a tough level to crack. So, what I'm expecting here between now and the halving is hey, just maybe we do consolidate here for a bit. It would be healthy. Again, we didn't have any retest down here, so that would also be healthy in my opinion. Any of these levels would be a healthy foundation for the next leg up, right? What we don't have here is enough history to have any strength. We don't have this. You're looking at Bitcoin's lifetime history above 69K right here, okay? And we've yet to have enough strength to consolidate above that range. So now it looks like the consolidation is happening here in this 59 to 69K range. That's quite the swath, right? That's a $10,000 range, and that's obviously pretty significant. But it would be, in my opinion, a stronger way to start to break out than just shooting straight up. These straight lines, to me, are not sustainable. So this, again, would be another reason why we could anticipate a retest down to this level. It went up too fast without any friction, and it wasn't tested. Sure, that happens from time to time, but to me, the stronger moves happen when we have good periods of consolidation, and then we have a reasonable move up, a little more consolidation, and move up. So I'd be very happy to see us consolidate here in this range. Eventually, we need to start printing candles above this level and then break out into a new all-time high. And at that point, we would be up into, trying to break into this channel. This, in my opinion, is where the real price discovery happens, up above this channel. We've got a long way to go to get there. Expecting straight rips through this is not realistic, in my opinion. Sure, if it happens, I'm here for the ride. But at the moment, I'm trying to manage my capital to get me buying opportunities and to fulfill potential buying opportunities in these ranges should they present themselves. Real quickly, I want to look over to a tool that I've been using to help identify and buy these dips, and that is our MTF mean reversion indicator from Material Indicators. In full disclosure, I'm a co-founder in the company, so that's obviously a great reason why I use these tools. But I don't tell you about them because I own the company. I tell you about them because I've been using them for years and years and years, and they work. It becomes increasingly more difficult to identify targets with a high probability of bouncing, and this tool does that for me. So I like that one immensely. It's part of my daily regimen. A quick look over at ETH, also having some real problems here, in my opinion. Right, a breakdown from the local high out of the channel. This was a rejection, I think, from the 786 fib. If I still have that fib chart on here, I don't know that. Oh, there you go. So this was a rejection from the 786. And, let me turn off these trend precognition signals and clean up a little bit, make it easier for us to see. This is what concerns me here. Broke through, really had a struggle, came through that 21-day moving average like nothing, right? Had a hard time, rejected on the attempt to break back in, and now a rejection from the 50-day moving average and this area of prior interest, which was a prior RS flip, right? So it's now for the moment reclaimed this level here at 33.30. It needs to break back above this 50-day moving average. If it does not, guess where we look? We look to other targets down here, lower. Around that 2,900 level. And if that doesn't hold, then we go to 2,500, which some decent history there. That would be very interesting to me in terms of a target. Where is the 0.5 fib? Let's see. That's at around 2870. So that's not too far below that. That's really correlates well with the 100-day. So these would be targets I would be interested in. I don't spend a lot of time with ETH, so take this analysis with a grain of salt. But ETH needs to find its footing, and similarly to Bitcoin, needs to protect from making a lower low here, which looks to be right around the $3,050 range. Needs to protect that lower low. If you lose this level, don't be surprised if we see price break down lower and go sub 3K levels on ETH. But at the moment, trend precognition showing some momentum building, and we're obviously seeing that play out with price pumping up right now. Again, we have Powell's speech coming up later today, so that may have that's going to have some influence. Whether it helps or hurts remains to be seen. So we'll be watching that closely as well. One last look at fire charts as we wrap up the analysis here. As you can see, we do see more buying coming in with some strength here at this level, trying to exploit this area of thin liquidity. So be mindful of that. Perhaps the fact that this liquidity left the game here might be an indication that they don't think price is going, that they think that this bounce is going to hold. It might do so for now, so watching that closely. Hope the analysis helps you out, guys. I really do appreciate the analysis. The support. I appreciate the support in the comments. In fact, yesterday somebody commented that they were having some issues with resolution of the videos over the past couple of days. So I'm trying something different here with a larger screen view to see if that consolidates into a better resolution on some of the platforms that I'm sharing that. Please let me know in your comments if it looks any better, or if it's worse, or if it's the same. And of course, if you have any other comments, feel free to share or suggestions. Feel free to share those with me. I love to hear them, and I engage with each and every one of them. So again, I appreciate the support. Nothing I say or share here on the analysis should be considered trading advice of any way, shape, or form. Trading is risky. Do your own research. Manage your risk and your capital so you can take advantage of the opportunities if and when they present themselves. Trying to help everybody become the smart money, right? You don't have to be a millionaire to be the smart money. You just have to make smart decisions. Here's to trading smarter, my friends. Have a fantastic day.